topic, creating awareness about INC 29. That is, INC 29 is the fast-track mode of incorporation of companies. This is between 6:15 and 8:15 in the same premises. This will entail members 2 hours of CPE. It's a free session. Members are requested to kindly attend the same. Environment. To chair this session and share his knowledge in this session, we have with us an expert in the field of IT, CAA Rafiq. May I now request CA Manohar Gupta to kindly escort the session speaker onto the stage. I also request sir to kindly present him a bouquet of flowers. CA Rafiq passed his Chartered Accountancy examination in the year 1985 and CISA exam in June 1995. His special expertise is in the areas of IT assurance using COBIT and data analytics using CAT software. He has experience of nearly 30 years in varied roles such as the CFO, CIO, IT implementer, IT consultant, IT auditor, and a software architect. Rafiq was one of the senior-most faculties of DISA course of ICAI. He has contributed in designing and developing the updated DISA 2 course of ICAI. He has conducted more than 300 days of training on IT audit, COBIT, and CAT for both public and private enterprises. He has made presentations at international conferences and workshops in more than 15 countries. Rafiq is currently the managing director of Windsor Infotech Limited, which specializes in developing data analytics solutions for auditors and BI tools for management. With this introduction, I welcome the session speaker once again, and over to you, sir.
Good afternoon. Good afternoon. Excellent. So, I'm sure you had some good working lunch and are excited to have some food for thought. I spent the last 25 years in the field of IT. For me, IT has been only information technology. It's not indirect taxes. It's not, what is it, income tax, or it's not international taxation. In fact, when I have conversation with my friends and CA friends, I talk about what are the changes happening. Quite often when I refer to IT, I'm talking about information technology, they are talking about income tax, because both of them keep changing. Back in 1995, when I passed my CISA exam, at that time I decided we need to evangelize usage of information technology among chartered accountants. 20 years hence, still I find there is a need to evangelize and promote the usage of IT among chartered accountants. The primary reason is the controls you had in controlling a horse, in riding a horse, do not apply when you want to ride a car or when you want to ride a plane. When you want to fight somebody who is fighting with a drone, you cannot fight with a sword. So it's important that we need to update our technologies and techniques. We have a plethora of regulations. In India, I think we are quite well known for regulations. In this session, I would like to focus on information technology and primarily from the IFC perspective. From the morning I have been sitting and I have gone through the IFC documents, and this is no strange document to me because this is something which was there earlier also in various types of frameworks. What is important now is we need to bring about a paradigm shift in the way we see enterprise processes. We see enterprise operations. We see enterprise regulations. Because most of the transactions earlier we used to audit using a transaction-based approach. Now we have to change to a process-based approach or a system-oriented approach. So the first important thing we need to do is bring about a change in our thinking. And that's why I thought I'll show you. My presentation is very simple. I got 4 key concepts which I would like you to carry with you at the end of my session. And I would like to reinforce in different ways. So I'll give you my presentation. In that presentation, along with that, I'll also show you 4 videos. If you don't remember the presentation, at least look at the videos, you should be able to remember that. I'll also give you 4 ideas or quotes based on which. I'll also demonstrate 4 techniques, okay, through which you'll find IFC looks a very complex and huge animal, how it can be made much more simpler, okay. Now this is a small video, some of you might have seen this. Let's look at it from the context of IFC and see what's happening here. Now assume this guy is a regulator. Oh, sorry. No, sorry, okay. Now this gentleman is the auditor. Now this is what can happen. If the intention of the regulators, the objective why they implemented this is not clear, I think then we can completely end in a disastrous situation. I told you about the 4 videos, so let me start with the second one right now. Look at this from the context of IFC. Okay, so if you've got the moral of the story, then I think you can go home. What do you think is the essence of what I was communicating through this video? Perceptions, yeah. The rules can be same, but it all depends on how they are implemented. Now, if you look at a manual environment, you have transactions which you can audit by tracing the transaction from the origination to the destination. You can do a substantial testing and you can verify the transactions based on sampling and test check, and then based on that you can come to a conclusion. But in the case of an IT environment, you have to change your way of thinking, your process of working. You have to look at it from the concept of a process. If you have to give a simple example, let's say you are asked to do the revenue audit of the Indian Railways as it runs now. So what is that you will do? You'll have to look at the ticketing system, how they have done the ticketing. You go to the platforms and do some sample check, and based on that you can come to a conclusion how the ticketing is working, what is the probable loss of revenue, whether all the controls are in place. Okay, a lot of these are manual controls. Now same audit, let's say you're doing for the metro. So do you think the methodology approach you adopted for the Indian Railways, can you adopt it in the metro? Because everything is controlled by the system. Okay, so you have to understand the system. You have to understand how the process works. Let's say you're doing the audit of a supermarket long back, when most of the controls were there manual, where you had this maker-checker concept, where you found that, okay, somebody who does the billing will not collect the cash, delivery will be a third person, so you had many manual controls. Now, if you look at the controls in the case of in the case of, let's say, e-commerce store, how do you audit an e-commerce store? The need for control still remains. In fact, they said, I saw an advertisement of a beautiful car in Singapore long back when I went there. There was a beautiful car, and on top of it was a caption. In life, control is everything. Lose it, your history. For enterprises, which most of the cases are automated now, if the controls collapse, the enterprise will collapse. And we have many number of examples where this happened. Now, regulators, as you know, quite often they tend to go to the extreme. They want to regulate everything, and that's where we have this IFC which has come in. IFC is not anything new. This is already there in some way in Clause 49 requirement. And Clause 49 requirement is modeled based on the SOX, which came somewhere in 2000 or 2002. After 1999, when most of the Indian companies, software companies, had exhausted the Y2K opportunity, they are looking at where there is another opportunity. And that's where, when the SOX regulation came in, the Indian software companies got a great opportunity. Because for implementing processes and controls, the corporate enterprise in America wanted somebody to document and confirm whether they have all the systems and processes in place. So many of the software companies, although they didn't know anything about the enterprise processes, they went in, studied the system, documented the process, wherever it's possible, they put a system in place, and they charged them for this. In India, similar regulation came in Clause 49, but I think as far as our process is concerned, we did not change. We still continued charging the same fees. In SOX, when it came in the US, the fees of the auditors increased more than 3 to 5 times. Whereas in India, I think now this is an opportunity. I do not want to prejudge that. Now whether there is an opportunity for the Indian auditors to change their approach and then based on that charge higher fees. So as far as I see, we can take this IFC as a challenge, or we can take this as an opportunity. It all depends on how we use this opportunity. I said there will be 4 key aspects I would like to cover in this particular presentation. Long back when I started my IT audit career, these are the 4 things which I was talking about. The only thing which has changed is the impact of IT has changed dramatically. Earlier, where IT was more of a mechanization, then it became more of an automation. Now you find IT is a key enabler. In any enterprise, remove IT, the enterprise will cease to exist. Long back when I was using bank audit, my boss used to train me, okay, this is what you have to verify, the bank interest and so many other cases, verifications. Now you find even the bank managers or the bank staff have forgotten how interest is computed because most of it is automated. Now in that case, we can't go to the extreme and think that because it's automated, all the controls are there. One of my friends was telling me that their auditee has bought an ERP software and said the ERP software has all the controls, so there's not much to do as far as the audit is concerned. I said it's completely wrong. You can buy a lock, but buying a lock doesn't guarantee security. You need to ensure that you have a system for putting the lock in the right place, keeping the key, and you also have to look at various other processes. So in the case of IT, first thing we need to study is what is the impact of IT on the auditors. There have been recent surveys done on what is the impact of IT by the Institute for Internal Auditors. I thought I'll just share some ideas with you on this. Especially in the case of IFC, one of the important aspects which is considered is the risks. Okay, you know that risk could be anything which could go wrong. Okay, now risk can be mitigated by implementing appropriate controls. And as auditors, we need to evaluate whether these controls are available, adequate, and appropriate. This is our fundamental duty. Okay, now we do it as a part of the report or we do it any other way, that doesn't make a difference. What is fundamentally important is, as auditors, when we are auditing any environment, it's important for us to understand what are the risks to the enterprise, especially considering that IT is a key enabler at all the enterprise processes, controls, regulatory requirements, everything is embedded in IT. So it's important we know how IT works. So we'll look at some of the key IT risks which are impacting the IFC, primarily from the financial reporting perspective. The third, we'll look at evaluating the controls in IT environment as per the IFC requirements. And fourth, if we have to use tools and techniques, especially in the case of IT environment, we need to know about data analytics. Data analytics is one core skill for an auditor in the new era, in this digital age, because most of the information is available digitally. So if you don't know how to access the information digitally, you cannot audit this information at all. Now let's look at the first point, impact of IT on auditors and the road ahead. Now what are the questions you need to ask? Okay, we have, as chartered accountants, we have our domain expertise, we have subject matter knowledge, we are experts in finance, accounting, regulation, so many other areas. I think we need to look at in the era of the digital age. Now recently, I think 1st July, Modi also launched what is called the Digital India Week, where he's talking about cyber warriors. We need more and more people who can provide and enable India to make a transition to the knowledge age or the knowledge era. Long back we had the, the industrial revolution, the agriculture revolution, so many other revolutions. The next era is going to be what is called as the digital revolution. In digital revolution, whatever can be automated will be automated. The most impact will be on people who are in the middle-level management or who are service providers. Because anything can be structured, which is of a static intelligence, which can be automated, will be automated. The key differentiator for a professional to exist in a highly automated environment is, can he contribute value? Now, he can contribute value if he knows how to apply his intelligence to the data and provide value to the management. That's going to be the key differentiator. And most of us have this core competency. What we have to learn is certain tools and techniques and certain way of thinking of how to audit in a technology environment and provide value addition to the management. Most of the enterprises I have seen, they would have spent heavily in technology, but they are not really harnessing the power of information technology. They are primarily used for processing of information. You find it provides only static intelligence. What enterprises need to survive and thrive in the digital age is dynamic intelligence, which requires application of intelligence, your core area of expertise in a specific business area, and get insights, inferences, and provide foresight to the management. This is what they can do. And this is where we can provide value to the management. So these are some of the questions we need to ask ourselves in terms of what does the future hold, what are the innovation which can occur, what are the knowledge and skill set do we have now, and are these sufficient for the near future? And are we prepared for the future? And how do we prepare ourselves for the future? These are some of the questions for which you have to find the answers. There is a survey which is done among the internal auditors internationally, and they said these are the 10 imperatives for the internal auditor which are going to drive success in a changing world of technology. One of the most important things they say, the first is you need to anticipate the needs of the stakeholders. The stakeholders, or if you call us the auditees, they're not prepared to pay only for putting a chapa or for doing a form filling exercise. They would like to see value. If you can demonstrate value, if you can meet the requirement, definitely you can charge higher fees. Develop forward-looking risk management practices. This is very important. As an auditor, we can see the enterprise and its operations from an independent perspective based on our own domain expertise. This is where we need to bring that risk management thinking, where you look at what can go wrong, and then based on that look at what are the controls which can be put in place. If you look at technology, greater the technology, greater the risk. For example, if you look at a car, Nowadays they say, if you look at a sophisticated car, it is actually a mobile data center. It has more than 60 or 80 electronic chips inside, which talk to each other. Later on you find you'll have driverless cars. So most of the thing is automated, okay? In the near, you also see, for example, let's say an aeroplane. There is a bigger risk, but the possibility of accident is much lesser because of the greater controls. In an IT environment, if you are able to assess the risk and implement the right level of controls, the risk reduces gradually, drastically. That's what is important. That's where the auditors can definitely play an important role. So we need to continually advise the board and the audit committee. We also need to be courageous. What do you mean courageous? To be bold enough to foresee the future and look at the dangers ahead and then decide that we are going to change. Quite often I say, it's like if you go into a, ophthalmologist and he does an eye test and say, can you read what is there on the wall? The auditor says, where is the wall? Now the question is, do we see the wall? So it's important that we start seeing the wall. Beat the expectation gap. So it's very important if you want to survive in the digital age that we need to support the business objectives. What does the business want? How can we help the enterprise transform to the IT era? By helping them transform, move the transactions to the digital way. Next, we need to identify, monitor, and deal with the emerging technology risks. Technology keeps on changing. With new changes comes new risks. Now you find most of the enterprises, earlier they're talking about e-commerce, they're now talking about mobile commerce. So even you're now talking about mobile banking. So there is going to be increasing number of risks which are going to be there. So we need to enhance the audit findings through greater use of data analytics. So we need to know how to access, analyze, and provide value addition to the management using data analytics. And now we need to go beyond the existing standards which are available. We need to invest in ourselves. That is very, very important. Like I've come across a lot of chartered accountants who invest a lot of time every day in keeping themselves update with income tax and so many other regulations. You need to allocate some time, probably half an hour, 1 hour, and get interested in using information technology or updating yourself with information technology. And surprisingly, I have seen, based on my more than 2 decades of experience, if you devote some time every day, in just a period of 6 months or 1 year, you can definitely get the required expertise to become an expert advisor in this. Now, just look at one question. You need to remember the historical audits will become history in the near future. Okay? Identify, monitor, and deal with emerging technology risks. Technology risks will keep on evolving. We also need to keep constantly evolving. There is an interesting advertisement by the Bombay police, especially the fraud investigation. They said the fraudster uses technology to commit the crime, and we use the same technology to catch the fraudster. Now, as an auditor, when the enterprise is using technology, do you use technology to review the risks? Do you use the technology to audit the controls? That's what is important. So we can definitely enhance the audit findings through greater use of data analytics. Maybe I'll show you some examples. So the need of the skill sets which are required from auditors are continuing to evolve. So you find there's more need for analytical and critical thinking. This doesn't go away. Whatever be the technology, they're still in the, you can say, the infancy stage as far as implementing artificial intelligence is concerned. This is where our analytical and critical thinking, especially as auditor, comes into the fore. We can definitely provide value addition. There is a need for communication skills. You also find that the data managing analytics, business acumen, IT, and risk management assurance. These are the key things. Now you find accounting is considered, is not given very important because they believe that accounting, most of them know, and most of it is actually automated. What is important is you can use the same technology as auditors to audit data-rich areas in much more sophisticated ways. And primarily, it's important to invest in yourself. That's where you can excel. Otherwise, you can keep on cribbing about the fees and the work, and the management doesn't pay. As for the management is concerned, if you're able to demonstrate value, they definitely will be able to pay. Quite often, this is a dilemma which auditors face, especially when auditing in an IT environment. We are lost in a maze. And this is where we have the problem of LOVE. And this is a fundamental problem of all auditors who are auditing an IT environment. All of you have experienced LOVE, but this LOVE is a little different. This LOVE stands for loss of visual evidence. In an automated environment, the evidence which you have to collect and evaluate for the purpose of providing your audit opinion or findings is not available. So you need to remember that in the case of an IT environment, the data becomes invisible, becomes inaccessible, becomes intangible. So you need to know what are the tools and techniques which you can adopt to access and analyze and draw inference from this digital data. So that's why it's very important you should know what are you looking for and where is the data available and how you can draw inference. Now let's look at the IT and the auditor. In the bygone era, audit was a separate function. You could ask the IT department to give some information reports and they could give you the reports, and based on that you could evaluate whether the controls exist. Now more and more you find that audit and IT have become embedded. Most of the information which auditors want is already available in technology. So in that case, as an auditor, you cannot keep on asking, give me the printed reports. You should know how to access this information directly from the information system and then analyze. And this is what IFC is all about. If you're looking at assessing risk, you're looking at evaluating controls, and you're looking at testing controls. And if you look at most of the enterprises, the smallest to the largest, most of them are automated. Whether the company using Tally or they're using a high-end package like SAP or Oracle Financials, whatever be the package they're using, you can still evaluate the data which is available digitally. For doing that, you need to know one of the core skills, which is data analytics. How, I'll also give you a little demo a little later. So the center for the auditor, he is, you can say, invaded by information technology. Anything he wants is already available in information technology. So this is where there's the need to update and adapt to the changes. And this is one of the questions, some of the questions you need to ask yourself. How do we navigate the information superhighway so as to increase our productivity? And how do we use the right toolkits? What are the type of toolkits which we can use? Now, can we still learn this, or does it require too many technical skills? And how do we provide the right level of assurance? What management wants is assurance. Can we provide assurance when we ourselves are not sure about what we are audited? So it's important when you are auditing the digital data, we should know what controls are existing, what are the risks, and whether we have mitigated the risks. And we should be able to test and come to a conclusion whether the risks have been appropriately mitigated. The concept of materiality which is there in the case of a financial audit is generally decided based on the value and the volume. In the case of an IT environment, it's not just the value and the volume, it is determined based on the impact or the consequence. For example, let's say a clerk who is working in stores, he has been access to the financial accounts. Now nothing has happened, but what is the impact of that particular access? Somebody who's working in the deposit, fixed deposit section is also got access to the cash module or the GL module. Now you should know what is the impact or the consequence. Based on that, you need to determine materiality. So what is important, fundamentally important is enterprises look for auditors to provide value addition, and this is where we can leverage the power of IT. And this is where our analytical comes to the fore. We can use analytical skills to access, analyze, and evaluate digital data. Now, is it possible? I'll just show you quickly later at the end of the session. So what is important is to explore and exploit new avenues by using data analytics, and that's where it helps us to build on our core competencies and skill sets. Now let's look at the IT risks which are impacting the IFC or IR. Fundamentally, it's important to remember that the ship is safe in the harbor, but that's not where it's supposed to be. For any stakeholder who starts an enterprise, if he wants to keep the fund safe, he can keep it in the fixed deposit or in any particular safe, or he can invest in gold or in some other area. But that's not what he is looking for. The money has to be converted into an asset, and that asset has to go through asset turnover. It has to be deployed in enterprises, and that's where it gives rise to risk. That's where it gives rise to value. Now, with great emerging technologies also comes great risk. Now let's look at e-commerce. Now if you look at e-commerce 2 decades back, there was a big craze that e-commerce is going to make a big impact, and now we find is definitely make an impact. And what we are seeing now is very, very minimal compared to what you will see in the near future. Now if your enterprise is selling on Amazon or Snapdeal or Flipkart and you have to audit, okay, now you need to look at what is the process they're following and how you can audit. Okay, you cannot adopt the outdated procedures of audit which you're adopting. And this is where you need to change your perspective from a transaction-based approach or a substantive-based approach to a compliance-based approach, to a process-based approach, to a system-based approach. This is where has to be a fundamental shift in the thinking process. And this is why you need to understand the enterprise from a holistic perspective, from a macro perspective, not only from a financial perspective. So if you have to audit in an IT environment, it's very important that you understand how does the enterprise operate? What are the various types of risks which can happen, which can impact the financial statements? The type of risks which can occur, it could be related to the strategy, it could be pertaining to the environment, market, criteria, etc. And all these have a contribution from IT. So when you are evaluating IFC from a control perspective, you need to look at what is the impact of IT. For example, if you look at an airlines, which is heavily automated, if IT is not available for a few hours, you can just imagine what is the impact for the enterprise. If you look at a bank, or any enterprise for that matter, you remove IT, then there can be a big impact on the business. Or if there is a risk, if there is a loss, somebody has been able to hack the system, then you find the system goes for a toss. And there have been many frauds which happened because of one person, the complete enterprise collapsed. I think one of the example was Leeson. Bank of England collapsed, which was there for more than 150 years, collapsed because one lack of control by one person having complete access to the information. So when you're looking at enterprise risk, it's important that you need to consider the IT risk and also the overall business risk. And this you need to look at in totality. And when you look at in totality, that's what is called as enterprise risk management. So in IFC, we're talking about a framework called COSO. COSO is primarily focused on enterprise risk management. We need to look at the different components of risk, right from the tone at the top to the various levels at which the controls are implemented, and then look at how these have been monitored. So when you are evaluating IFC, you are looking not only at the final product, which is the financial statements, but you're also looking at the process which produces the financial statements to be able to confirm whether the results which are produced have been consistent with the process and the controls which have been followed. Long back, the regulators have always been wanting to ensure there's a system of internal control, and they brought it in CARO and so many other ways that you need to have internal audit, you need to have internal check, you need to have internal audit. Now with IFC, I think it becomes the message is loud and clear. As an auditor, we want you to look at the internal controls. Okay. So there is no escape from this. And this is what we say, now evaluating controls or implementing controls is not an option, it's now mandated by law. Now let's look at how do we audit systems in an IT environment, especially from the perspective of IFC. The guidance note states that the enterprise should have a benchmark system of internal controls based on a suitable criteria. Now what is the suitable criteria? Suitable criteria could be a framework, which is the industry best practices, or the enterprise itself has developed the controls which consists of the policy, procedures, practices, and the required organized structure, which ensure that there is a system of maker and checker, there is a balance, there is a control to ensure that no single person can initiate and complete the transaction, so that the errors and frauds are minimized. So what is important is you need to consider what is the benchmark you're going to use. Based on that, you need to evaluate and then decide whether the controls are available and whether all the requirements of compliances have been implemented in the system. In the guidance note, you also have a specific section which talks about understanding the IT environment. One of the questions which I always ask whenever, for most of my friends who are auditors is, okay, you've done audit of this particular company, can you give me a basic information about what is the IT environment? They don't have any documentation to say, which means they don't even know what is the server, how many users are there, what is the operating system, what is the database, what is the application software. They may have some idea, okay, they're using SAP or this one, but they're not really spend time on that. In the case of IFC, there is no escape. You need to understand the IT environment. Without understanding the IT environment, you cannot really provide the report of IFC. So you need to understand the IT environment. You also have guidance for this. You need to understand how the information technology controls work, how the access controls work, what are the system controls and various other areas. And this where probably the DISA course could be very, very useful for you. So if you look at the risks and controls, enterprise always have to balance the risk vis-a-vis the controls. The enterprise has certain business objectives, which clearly says where do we want to go, and there are risks. And we need to implement the controls to ensure that the risks are mitigated. The enterprises, when they're implementing controls, because controls always come with a cost. Now, the security you have in an airport, you cannot have in a railway station or a bus stand. Okay, you can implement that security because the people are prepared to pay and the risk is much higher. So, when you are implementing controls, you also need to look at the value for money or the return on investment. That's where you also need to look at performance. Does control help you in improving the performance or ensuring the optimal level of performance? And this is what is important when you're doing a risk assessment. If you're auditing information technology, this is fundamentally why information technology, any type of audit to do, whether it's a tax audit or a company audit, any audit for that matter, primarily we need to understand the business process, we need to understand the regulatory requirements, we need to understand the organizational structure because we need to know what are the segregation duties, who has got access to what, and then we need to understand the technology deployment. And based on that, we should be able to evaluate the risk, assess the controls, and then come to a conclusion whether the controls are working as envisaged and designed by the management. This is what we have to fundamentally do. If you look back 10 years back or 20 years back, we had something called the fort model of security, where you could say that, okay, you have the fort, most of the valuable assets can be secured, and there's a batch mode of processing where you can put the controls in that particular mainframe environment. Now, we are not in a mainframe, in a fort environment. Now, for example, most of you have data which is on the cloud. Let's say you have a Gmail account. If you're outsourced, let's say you're doing e-commerce, you don't know where your information is. So the need for control is much more higher. So enterprise thrive because they're able to use the existing information system, provide this information to the users, and that's where they're able to leverage information and provide value to the stakeholders and the customers. Now, in providing access to this information, there is an increasing risk. But to mitigate this risk, you need to have the right level of controls. So if you want to implement the controls, if you want to evaluate the controls, you cannot evaluate or implement the controls unless you have an understanding at a macro level what is the process. So this is where it's important that you know not only the logic of how the information gets processed, where does the transaction get originated, where does it flow, what are the controls which are required, and then based on that, whether these controls are working as envisaged. Long back, they said that there is a doctor in Nimhans who decided the patients are all good, they have to go out. Okay? Because of the documentation requirement, he decided to do a test. So he picked up 3 of the smartest guys and told them, I'm going to ask you a question, and if you answer it correctly, I'm going to let you free. So he picked up the first guy and asked him, what is 3 into 3? This guy thought for a while, 3 into 3. This fellow said, Madhuri Dixit. Doctor said, sorry, wrong answer. He was disappointed. So he picked up the second question and asked him, second guy and asked him, what is 3 into 3? This guy also thought for a while and said, it's Michael Jackson. Doctor is disappointed, both these guys are wrong. So he picked up the third guy and asked him the same question, what is 3 into 3? This guy thought for a long while and finally said, yes, I know the answer, it is 9. Doctor was very happy and he was about to write the discharge certificate, said, yes, we can go. Just he was about to cross out, he called him and said, hey, 2 other friends who were there with you, they're not able to get the right answer. How you could get the right answer? He said, doctor, my logic was very simple. I multiplied Madhuri Dixit by Michael Jackson and got 9. So in an IT environment, the answer could be right, but the logic could be completely wrong. Okay, it is important that you not only understand the report which you're getting, but you also need to know the process which is happening inside the computer. Okay, and this you cannot evaluate unless you know what is the configuration, how the system works. The same doctor decided to do one more test. He picked up one guy who thought was smart and then asked him a question. What will happen if I cut off your right ear? This fellow said, I'll go deaf, I cannot hear. Doctor said, right answer. What will happen if I cut off your left ear? He said, I'll go blind, I cannot see. Doctor said, sorry, wrong answer. So the patient protested, doctor, I can give you the logic why my answer is right. Doctor said, please tell me why the answer is right. He said, I have short sight, I wear spectacles. If you're going to remove both my ears, where will I put my spectacles? Without spectacles, I can't see. So it could be possible, the answer could be wrong, but the logic could be right. When you're auditing an IT environment, it's important that you get both the logic and the answer right. So this is where you need to understand the system and the process. Now, you're all familiar with the sections. I'm not very particular about the sections, but I just wanted to go to the core of what is there in IFC. So primarily, what is that we are looking at? The auditor is required to state in his or her audit report, adequate internal financial controls or systems are in place. So the judgmental, this one is adequate. And we are talking about internal financial controls. Now here we are talking about controls which are internal, and in the case of IT environment, these controls are embedded. For example, there is a company which accepts fixed deposits. Now, you know, as per the, what is the section 269 yes or this one? 269 yes, you're not supposed to accept deposits about 20,000 rupees or less in cash. Now it might have changed. I'm just giving an example. Now, in a manual environment, if I have to see, how will I verify this? I can review the cash books, do a scrutiny of the cash book, based on that I can find out. Now, if the same company is actually automated, they're using a fixed deposit package. If I have to verify this, how do I verify? And look at the configuration. I have to look at the, okay, based on the configuration, can I set the configuration as 20,000? Who has set the configuration? Can it be changed? If so, whether it has been working throughout the year. Based on that, I also do a sample substantive checking. But if I know that the process is working correctly once, then I know the system works completely. So if I spend time in understanding the process, then I don't need to spend too much time in understanding doing the detailed substantial testing. This is where we have to bring about a paradigm shift, that in the case of an IT environment, when you're auditing, you may have to spend probably 50 to 60% of the time in preparation and planning. In execution, you may spend only 30% and only 10% in reporting. Whereas in the case of audit, if you follow the manual approach, you may spend probably 10% in preparation, 80% in execution, and only 10% in reporting. So you have to invest your time. Another important factor, especially in an IT environment, is you need to remember that you cannot learn driving by sitting in the back seat. You have to get into the driving seat. Although it may be a little painful initially, you have to get in the driving seat, which means you have to understand with the enterprise, with the CIO or the CEO or CFO or the IT department, understand what are the business processes, how do they work. You need to walk through the applications, some of the applications, then only you will be able to know how the application works, where are the risks. Now, this is not an audit which can be delegated to people and say they will go and do the audit. Like earlier I used to say, the auditor in the manual environment was like the guy who was sitting in his palace, and he used to send his boys who are the palanquin riders. They are the ones who carry the auditor. Now it's not possible. The auditor has to get his hand dirty. He has to understand the system and the process. Then only you can provide value. So what is important is you need to look at two important aspects. One, whether there are adequate internal financial controls, which means you need to understand what are the internal controls, and your primary focus is financial controls. In fact, one of our friends was saying that, see, this is an IT audit. Why should I do the IT audit? You're not doing IT audit. You're doing audit of financial controls only, which are embedded in technology. So you cannot audit technology unless you know how the controls are working inside. And second important aspect is operating effectiveness of such controls, how well they are working. Now, how will you know how well they are working unless you know how to test them? This is where you need to update your knowledge. What is IFC all about? It's not about technology. IFC is all about the policy and procedures which are adopted by the company as applicable for the enterprise. And what you need to look at is the accuracy and completeness, because you look at all the system and process they have is processing, whether you have procure to pay or whatever be the process they have, sales, purchase, whatever be the process they have, all that gets funneled into the final accounts, the financial system. And from that you prepare the financial reporting. Okay, whether that system is working as envisaged, as designed, with the right level of controls. So you need to look at technology from that macro perspective, from that holistic perspective, to get an idea about how the controls are working. If you look at this section 134, this is made by one of my friends who made a presentation. He said, what is important for an enterprise to develop and implement the risk management policy? So risk, we know, is what can go wrong. So in enterprise, you need to look at, let's say, purchase process. So in the purchase process, when they're using technology, what can go wrong? In the sales process, what can go wrong? So when you're looking at IFC controls, you're not only looking at the IT controls, you're looking at all the related controls also. So in each of the areas, let's say start right from the, let's say a supermarket is procuring. So when they're procuring, they're getting this inventory which comes in, there is a purchase order which is raised. So you should be able to look at right from the origination, where does the order get generated? What is the authorization for that particular person? And then based on that, the goods come in. Okay, when the goods come in, they enter that particular information, and then there is a person who actually, there is a pricing. Okay, now what is the pricing policy? Who determines the pricing policy? Do they have a policy for pricing? Okay, once the pricing is done, all these goods which are there have to be, what is it? You have to put a label, no? What is it called? To be read by the, barcoding. Barcoding, you have to ensure, you may have the best product, you may have the best policy. Now, for example, a product which costs 1,000 rupees, somebody puts a wrong barcode, 100 rupees. What will happen? The system will read as 100 rupees also. So you need to have controls to ensure that the barcoding is, the system of process barcoding is proper. Similarly, the shipping, packaging, like that, you need to look at the complete process, understand what is the process, how does it work, and then look at the controls. So what is important is, if you look at the keyword, the management is responsible for implementing the policy and procedures. We need to understand how these policy and procedures are working. And these are policy and procedures pertaining to all areas of work, which are in the purview of a financial control. You may not look at, let's say, business continuity planning. Okay, you are looking at all the systems and processes which get funneled into the financial or accounting system. Now you also have penalties. I'm not sure whether the auditor has a penalty. Is there a penalty if the auditor has, maybe he'll be prosecuted by the ICAI or, okay. So the auditor's report shall also state whether the company has adequate interfinancial controls, effectiveness controls, this we've already seen. There is also a fine. One thing I found, especially in the higher the automation, I also found fascinating that the regulators also got fascinated with increasing the fines. The more the automation, the more the fines. Okay, for example, let's say Companies Act, you're supposed to file some minutes or the auditor's appointment. Now, if you don't file it, there's a fine. Okay, what does it matter to the regulator whether you're filed or not? But as far as they are concerned, they have a process in place, you want to ensure that it is complied with. So this is very important, this is where it's very important to understand what is the system and process, what are the compliance which are applicable, and based on that, ensure the compliance. When you have an audit, the audit is supposed to be the third line of defense. The first line of defense is the senior management, where they need to have internal controls, and then you need to have the second line of defense, which is the financial controls, security, risk management, etc. Now, as an auditor, first thing we need to understand both the first line of defense, the second line of defense, evaluate both of them, then come to a conclusion whether they are working as envisaged, and whether there are any material misstatements or the risk. This is what you need to evaluate. So in audit, we know most of the cases when you have to audit is all the process of collecting and evaluating evidence as per the audit objectives. In the case of an IT environment, this evidence is available digitally or electronically. So we should know how to access and analyze this information. So there is a process of planning, design implementation, operating effectiveness, and reporting. The fundamental difference between a general audit and the case of IFC report is that we need to assess the risk. We need to evaluate the controls to check whether the controls mitigate the risk, and then based on that we need to test the controls to confirm whether the controls are working as envisaged. Like they say, if you got the risk, if I give you an equation, risk is less than control. Is it acceptable to you? Risk is less than control. What is the resultant effect? There is a residual risk. Okay, that residual risk whether the management has accepted. Okay, it's not necessary that you can mitigate every risk. So you need to look at the risk and balance with the right controls. If the risk is equal to control, you say it's acceptable. If the risk is less than the control, is it acceptable? What is happening here? The risks are less, but they have more controls. As an auditor, would you be happy? You should be happy, but from the management implication, what is the implication? Controls always come at a cost. Okay, so you should remember that wherever controls are more, then probably there are additional cost which is not really benefiting the business. So you also need to ensure there's a reduction. Okay, I'll not get into this, but I just thought I'll give you one tip as far as this is concerned. Quite often, I think right from the morning you have been going through the book. I also went through the book 2 or 3 times because I have designed an audit software which can be used for any type of data analytics. So I was reading the IFC 2 or 3 times, and then because I have read so many frameworks, I was also part of the member who made COBIT. So I was finding a little difficult to understand, to structure how best can I practically convert it. But when I saw the CD and I looked at the examples, I thought the best way to understand IFC is to start reading this from the bottom up. So it means you first look at the examples which are given in the word, where they give you the examples, but in the risk everything, because you're already familiar with this, you will be able to understand it, and then based on that you can go further. Now, they've asked me to conclude in 5 minutes, but I was told that I was supposed to speak for 1 hour, 2:45 to 3:45. So I cannot take it. Okay? So I overrule, sorry. So is it okay with you? Let me decide, because it said now this famous speaker was talking for quite a long time. And then he asked all of a sudden, how much time do I have? One fellow from the end said, you can have as much time as you want. We'll be here for 15 minutes. So I want to know from you, because I had mentally planned my presentation, maybe 20 minutes I can cut down to 15 minutes. Is that okay with you? Because finally it's you have to decide. Because I'm going through a particular message, so logically I want to conclude at that end. Okay, this is a very important thing. So if you look at this particular perspective, you're looking at financial reporting and you're looking at the financial assertions. Okay, you're looking at correct completeness, existence, all this, most of the things you're already aware. Now the question is, how do you validate this in an IT environment? That's what is important. I'll quickly show you in the software a little later. So what is important to decide, okay, what are the assertions you're looking at? When you're auditing or assessing the risk and the controls, okay, what are the assertions? You're looking at correctness, you're looking at completeness, you're looking at valuation, you're looking at validity, you're looking at segregation, you're looking at presentation. You should be clear about what are the criteria against which you're evaluating. Okay? Then based on that, you should be able to evaluate and confirm. For example, let's say all the purchases have been correctly and completely accounted. All the sales have been correctly and completely accounted. The cutoff concept has been followed. The inventory has been correctly followed. If there's a bad debt, the bad debts have been written off. The inventory, if there's obsolete inventory, it has been written off. So you determine the criteria, based on that you verify. So in the case of manual system, you do a substantive testing and check. In the case of an IT environment, you need to understand the process. Based on the process, then you take a call whether the process is working correctly and whether there are control weaknesses which can mitigate the risk. One thing we can be sure which can happen in the case of an IT environment is there's a great risk. Also, you can implement this by better controls. So if I have to navigate this and provide you the information about these controls, I thought now we come to the second video, where I want to give you the second message. Okay. So what you see here is a gentleman, two gentlemen, who are fishing in the traditional way. So what is the message? The traditional auditor can do fishing in the traditional way. But if you are auditing or finding controls or assessing risks in a computerized environment, you should know exactly how to access, pick up the right information and come up. Okay? Technology keeps on changing, and this is what happens. Now we come to the third. Okay, so what is the message here? The message is not clear, so I think you should see the sequel to get the message. Now just remember what happened in the first. Now look at the second. So what is the message? In an IT, long back I remember, we used to have typewriters in government offices, typewriters, almiras, books and records, all this used to be kept inside the locked almiras. Now you got everything is available in IT. Okay, the information is available electronically. So you can commit a fraud. When you commit a fraud, you're not looking at small amount of money. Okay, earlier you come to the bank, you steal amount of cash which is already available in that branch. Now, in IT, you can take the whole van. So what can happen to the auditor? Are you back? Yes. So this is what I was referring to. These are some basic concepts which we already know. Okay, completeness. We already know what is completeness, what is accuracy, what is validity. Now we need to know how to verify this in an IT environment. Okay. So we have this controls, two type controls, general controls, which we also call it as the controls at the macro level, which impact the complete enterprise as such. Okay. And next we need to look at the application controls, because applications actually what run the enterprise. Most of the financial statement controls are embedded in the application software. So we need to understand what are the controls, especially if you want to audit any company, you need to understand the core applications in terms of what are the application provide, how does the transaction get originated, who has got access to information, where does the controls reside, where is the information available, to whom this information is available. So in the case of technology, you need to remember there are various layers of technology. You have the database, you have the operating system, and you have it on the network, and finally you have the data. So you need to have some basic working knowledge of all these aspects of technology. You are not supposed to be technology expert, but you need to have some fundamental aspects of understanding of technology. So when you're looking at application controls, because application is what run the enterprise, you need to clear about what are the business processes running. And when you're auditing, this is what is most important, configuration. For example, if I'm auditing a bank and I want to check whether the interest rate has been correctly applied, let's say for the loans, consistently throughout the year. Now, earlier we used to verify pick up some loan accounts of a particular amount or with a particular interest and verify it manually. Now I need to go to the configuration, the parameters where this amount is actually set. Look at whether the amount has been correctly set. Now do 2 or 3 times that interest rate has changed. Okay, in that case I need to go to the audit log and check whether it has been retained. The next thing you also need to check who has got access to this, when it has been changed, whether it's an audit log. So if I'm clear whether this configuration has been set correctly, whether it's properly controlled, then maybe I'll do a simple check of some of the transaction to confirm whether the interest processing is correct. Okay. So we need to understand the business process functions. We also need to know this is what is called as the master data. So this is where we need to know the relationship between the general controls and the application controls. In one of the cases they said there used to be a lot of thefts which are taking place. So the CEO called the chief security officer and told him that tomorrow if something goes, I'm going to fire you. So the chief security officer with his full team was sitting together and then inspecting everybody who went out of the office that day. And in that night he slept peacefully because he thought there should not be any issues. Next morning he was called by the CEO and fired. This fellow said, sir, tell me what happened. Nothing would have gone wrong because I was personally checking. If a car went in, I went inside the car, I checked everything. Can you tell me what got lost? He said, yesterday one lorry was stolen. And this fellow remembered he went inside the lorry to check whether anything inside the lorry. So in the case of IT, you may have all the application controls, but you don't have the controls at the general level, at the general control level, then the whole controls can be compromised. For example, let's say Finacle software. So you have all the controls for the application in terms of who can access. But if the database administrator has not been properly controlled, he can go and manipulate the transaction. So he can go to a non-operating account, convert one particular account, remove some zeros and add to another account directly through the database without even going through the transaction. That's what can happen. That's why it's important for the auditor to also understand some of the general controls. So you also need to look at the access in terms of who can access this information, because this is what you look at in terms of segregation of duties. You also need to look at in terms of data entry, what are the type of risks which can happen. You must have come across cases where, for example, stock exchange, some of the shares were quoted at a particular price and they had to stop the trading because it's a mistake. You also need to look at the processing mistakes, whether the processing has been done correctly. Now let's come to the last part where I was talking about using data analytics. What is important to remember is now we have dealing with large volume of data. And 80% of the internal audit or any audit we do is related to technology. Now we can analyze large amount of data using technology. What is important for us to understand is, first ask the question, can we do something electronically in 20 minutes that normally take us 20 hours? Now if you know how to use data analytics, doesn't mean that you need to use a special sophisticated software. It could be the same application software that the client is using. Use the reporting and the query features and pick up the information which you want. So what is important when you're auditing, especially in IT environment, from the application perspective, especially from an IFC perspective, is you should know what are the data you are going to audit. You need to collect the data. Now that data you may collect as an independent, as a form of a report which you export to Excel or access any other format, import into data analytics software and do the audit. Or you can use, let's say the client is using SAP, you should be able to use the SAP itself, query the information, get that information which you want. So it means you need to invest a certain amount of time in understanding the technology, specifically the application software in terms of how it works. So you need to understand how the policy procedures of the organization have been embedded inside the technology. For example, there is an authorization policy. Okay, how the authorization policy has been set in the system, you should know that. And next, you should also know what are the regulatory compliance. For example, TDS has to be deducted. Now, there are 10 lakh transactions during the year. Now, whether TDS has been correctly computed, you can go to the configuration, look at how it's been set, and if you know this process is working well, in the case of computers, the beauty is if it works once, it will work any number of times. So you need to spend time in understanding how the process works. So the bottom line is, any electronic information that is auditable is a potential candidate for applying CATS. What is CAT all about? CAT is about computer assisted audit techniques. There's one more acronym I got for this, CATS, which is computer aided thought support. Now, if you know what to think, what to ask, then you can get the information which you want from the computer. So what is important, they said audit is all about asking the right questions. Now, it's not just the right questions, it's asking intelligent questions. So this is what the approach you generally follow when you're using data analytics. You need to be very clear about what are the specific audit objectives, what are the period for which you're doing the audit, where is the data available, what is the reason why you're performing the test, and how do you perform this audit. Now this gives you the walkthrough. You set the audit objectives, based on that set the control objectives, what are the controls you're going to evaluate, decide the test questions, get the relevant data, identify what are the tests you're going to perform on this, perform the test, based on that you can evaluate the evidence. And then come to a conclusion whether all the risks have been mitigated. Are there any material misstatements? Based on that you finalize the report. Now this gives you a list, for example, let's say you look in the sales cycle. Orders are processed only within the approved customer credit limits, and the criteria looking at is valuation. Now how do you check this? Just let's pick up one example. So there is a pay order file where this particular, orders are processed only within the approved customer credit limits. For every customer, there's a customer master for which there's a credit limit which has been authorized. So you need to understand the process, who authorizes the customer credit limit, where is it stored, and who can modify it. And whether the sales when it happens, is it within the approved limit. Okay, so you need to spend time, understand where it is set, who has got access to it, and then document the particular process. So like that you have various examples. This gives you, what is important is, like I said, you need to understand the complete business flow in terms of where does the transaction get originated, how does it go through. In the case of a manual environment, you can review or trace the transaction from the origination to the destination. Let's say if I was teaching accounts long back. So you had this primary books of accounts, then you have secondary books of accounts, from which you prepare the final accounts. Now, in the case of computer, where is this primary book of accounts, where is the secondary book of accounts, where is the final report? All this information is stored in the form of tables. All this process which you're talking about are embedded inside the IT. So you need to understand how this processes, the process still remain. So you need to understand how the processes are being embedded in technology, whether they're working as envisaged. Okay, this gives you some examples of how you can do a financial audit. Similarly, if you look at purchases, this is some of the controls. I'll make this slide available to you. So the bottom line is, the message is you need to know how to use data mining and analytics. Data analytics is also called as BI when it's used from the management perspective, which is business intelligence. This is where there's the value addition in terms of what are the type of new avenues you can provide. One of the questions which I always had is, in the case of SOX, like I said, the auditors were able to increase the fees. Now, because of IFC, do you think the auditors will increase the fees? If so, by how much? Or you'll just sign? Long back, I was doing my law. And there's one, I don't want to give the name of the college, and there's one principal, it's an evening college. And I used to sit with that guy, the clerk, administrative clerk, and I found any correspondence which comes in, he takes to the principal, and the principal clears it within 10-15 minutes. And this boy comes and files. I was really curious, what is the correspondence within 10 minutes, 15 minutes he clears? And then one day I got curious and saw what was he writing. And in all the papers, I found he keeps his hand and says, file, file. He didn't, there is third reminder, please do this. He said, file. Now, as auditors, we need to see, are we doing a form filling exercise? Are we doing a real value addition? Sorry for being a little blunt. Okay, so this is the perception we need to bring about as far as the change is concerned. Quite often we thought learning technology is quite expensive, it's quite complex, or it's very technology oriented, it's for specialists. It's not so at all. Anybody can learn technology. What is important is, if you can understand Income Tax Act, you can definitely understand information technology. The only thing is you just need to bring a change in your perspective. I talked to some of my friends. Recently I was talking to one of my friends who's an expert in service tax and central excise. I was really amazed by the way they interpret and play the words, no? The way they interpret and meaning. So I read it, for me it's very simple. But the way today morning also our friend was doing, he reads the IFC and then interprets in multiple ways. Now that you have developed this thinking as a chartered accountant. I just want you to bring this intelligence, the native intelligence which you got, apply to technology and the process. Then you can definitely create magic. So what are the key concepts? I said there are 4 key concepts. The first one is that IT will increasingly impact enterprises in the audit. There is no doubt about it. You will see it increasingly as we go on. Risk, control, and security are getting embedded in technology. You'll find more and more it's there. So we need to understand what are the risks of technology, how the security is available, and how it can be configured as per the enterprise requirement by using the right level of controls. And we also have various types of regulations. Implementing control is now being mandated by law because they found they want to protect the stakeholders' interest. And this is where you want to use technology for auditing technology. So if you want to evaluate controls, you need to understand how to access, analyze, and audit this digital data. So the key differentiator in the near future, like long back I used to say there used to be computer literate auditors and computer illiterate auditors. Now you can say that the key differentiator between a skilled professional and unskilled professional is knowing how to use the right tools as relevant. Any data analytics software or any software or technology for that matter is like a Swiss knife. You should know what to use when. Okay, thank you very much. I just want to take 2 minutes to show you some of the key features. Okay. I think the last video is due. Let's finish it. So what is the message? When is the time to prepare? The time to prepare is can you park a car like this? Now, is it effective and efficient? Does it have risk? Okay, so I just want to give you 2 minutes and just give you an overview. See, if you look at the data analytics software, I'm not here to market the software, I just want to give you an idea to say that the data analytics software, let's say, has the look and feel of an Excel spreadsheet. So if you're already familiar with Excel, you can also use these features. But what is important to remember is the data analytics software is designed for the auditors. And there are very powerful functions through which you can analyze. I'll just give you one example in just 2 minutes. Let's say I've got this. This is the financial data, the sales data of a particular client. Now I have to adopt the cutoff concept. Okay. So what is that cutoff concept? I want to check whether the transactions are from 1st April to 31st March. What do I do? Even using Excel, if I just click on this, I know the start date is 1/4/2011 and the end date is 31/3/2012. So it means what is that I've done? This is the data which I've taken from a client, which is the sales data. I've just extracted the source data, exported into Excel, and then based on that I'm able to analyze. Okay? Let me show you one more example. Let's say I want to verify whether the postings has been properly done. So there is a function called classify. I pick up the name and I say I want total of the sales. Now based on this, what do I get here? I get the transaction summarized as per the name of the party. Now on top itself, I find there are 2 transactions where the name is not available. Okay, and then for each of the parties, I get the number, I also get the percentage. Okay, which means I can actually verify whether the posting has been done by the package correctly. Okay, what will be the package? Let's say I am doing a VAT audit. I want to check whether the sales, monthly sales is correct. Okay, you have to file the VAT return, the monthly return. So you got the sales data, you just apply this. So if you see here, I got for each of the months, I got the sum of the sales, I got the average sales, maximum sales, minimum sales, I got the complete figures. So I can check with the VAT return whether the sales amount is correct. Okay, let me show you one last example. Same example in MIS, I want to check whether the transactions have happened on a Sunday. So I go to the day of the week and just say I want the total. See, I've got the transactions as per the day of the week for Sunday, Monday, Tuesday, etc. Now, this is some of the features. There are hundreds of features which are available in audit software, which are designed primarily from an audit perspective. This is what I want you to open your eyes towards and start looking at. Okay, so the key message which I want to convey was, if you want to audit technology, you should know how to use technology. Okay, if you want to catch somebody who's driving a car, you cannot catch him riding a horse. Okay, so let me conclude with one story. There's once you must have heard the story of the monkey and the cap seller. What happens in the monkey and the cap seller? The cap seller fell asleep, and then when he woke up, he found all the caps are gone. But he remembered his father had told him that monkeys are apes, they imitate. So he took the cap and put it down. The monkeys also did it. He gathered and went away. Okay, that's how the cap seller was able to save the day. There is a sequel to this. The son of the cap seller also came and fell asleep, and when he woke up, he found all the caps are gone. Okay, and then what did he do? He remembered what his father told him. He took the cap and put it down. A young monkey came, took that cap and went away. None of the monkeys put down the cap. And the little monkey said, my father also told me the same story. Okay, so it's important that audit controls, as an auditor, you need to come from a different perspective. I was doing a training for one of the companies, telecom companies in Malaysia, for using a standard called COBIT. And when I did the training in COBIT, at the end of the training, the IT management said, we always used to wonder how these auditors who are not knowledgeable about IT, they're able to ask the right questions at the process level, because they don't know much about technology, but they still say, okay, have you done this? Why have you not done this? Then he said, now after the training, now we realize they're getting the questions from COBIT. So if you want to use IFC, the only thing you have to do is read IFC, the guidance note, and start implementing it using the implementation guidance. And you can also refer to other frameworks which are available. There are enough number of frameworks and criteria available. And this is a great opportunity. Now the question is, you can take it as one more opportunity, or it's a problem. Thank you very much. Sorry, it took a little more time.
Thank you, CA Rafiq, for explaining the various IT risks and also sharing your knowledge on the evaluation of various IT controls. Another round of applause, ladies and gentlemen, to CA Rafiq. On behalf of Bangalore branch, may I now request CA Gururaj Acharya to kindly present a memento as a token of our appreciation to CA Rafiq.